Ever wondered what it takes to spot a stock that could, multiply your investment? Well, today we're doing just that. We're going to break down an analyst's report on a company called Ganesh Green Bharat to see what clues they found that might point to some massive potential. Let's dig in. All right, before we dive deep, let's get on the same page. Have you ever heard of a multi-bagger stock? It's a piece of investing slang, for sure, but it's absolutely central to what we're talking about today. And trust me, it's a term that gets investors very excited. So what exactly is it? It's actually pretty simple. A multi-bagger is an investment that gives you a return that's, well, multiple times what you put in. A two-bagger, that doubles your money. A 10-bagger, you've made 10 times your investment. It's basically the grand slam that every investor dreams of hitting. So that's the dream, right? But how do you actually find one of these grand slams before everyone else jumps on board? That's the million-dollar question. It all kicks off with what we're calling the multi-bagger hunt, where analysts sift through a whole universe of companies looking for that one shining star. And in the specific analysis we're looking at, that hunt led them straight to one company. So let's turn the spotlight on Ganesh Green Bharat. So who are these guys? What's their deal? Ganesh Green Bharat is right in the thick of it, operating in one of India's absolute fastest-growing industries, solar energy. We're talking solar panels, streetlights, the whole green energy shebang. Okay, now let's get to the heart of it. What are these specific reasons laid out in this analysis for why this company could be a potential multi-bagger? This is where we make the case for growth. First up, and this is a big one, the company is basically riding a massive wave. You've got these huge government targets for renewable energy, which means the entire solar industry has this powerful tailwind just pushing it forward. It's what analysts call a sunrise sector. And that's a perfect analogy, right? It means the sun is just coming up on its potential, and the brightest days are still ahead. And this chart, it shows you exactly what that momentum looks like in practice. The analysis points to sales tripling, going from 106 cores back in 2021 to a projected 318 cores in 2025. I mean, that's not slow and steady growth. That is a steep upward climb. Now, here's where it gets really interesting. Look at how that sales growth translates to the bottom line, the actual profit. Profits are shown growing even faster, jumping from 5 cores to 30 cores in that same time frame. That is a 6-fold increase. To me, that signals the company is getting way more efficient as it gets bigger. Okay, so strong growth is great, but the big question is always, can it last? The answer might just be in this next number, 1,174 crores. That is the size of the company's current order book, and believe me, it tells a really powerful story about what's coming next. So what does that huge number actually mean? It means the company already has confirmed orders in the bag that pretty much lock in its revenue for the next 3 to 4 years. And we're not talking small-time clients here. These are major players like NTPC. This gives them a really strong foundation of stability and, visibility into the future. And check this out. They're not just sitting back and coasting on those orders. No siree. They are actively expanding their manufacturing capacity. This is just a crystal clear signal that management isn't just trying to fulfill current demand, they are gearing up for an even bigger future. All right, now here's a really crucial piece of the puzzle, the price tag. Using a common metric called the price-to-earnings ratio, or PE ratio, the company is valued at about 33. So think of it like this. For every dollar of profit the company makes, investors are willing to pay $33 for the stock. But here's the kicker. Its competitors, their price tags are way higher, somewhere between $50 and $90. According to this analysis, that basically means Ganesh Green is on sale, which leaves a lot more room for its price to grow. Okay, let's be real. No investment is ever a sure thing, right? So what's the other side of the coin? Every high-growth story has risks, and it's super important to look at them. So let's check out the potential red flags. The analysis points out 3 main things to keep an eye on. First, negative operating cash flow. In simple terms, this just means the company has been spending more cash on its day-to-day operations than it's bringing in, which honestly isn't that unusual for a company investing so heavily in growth. Second, you've got those big picture industry risks like what if there's an oversupply of solar panels or the government cuts subsidies? And third, a promoter, that's one of the company's key insiders, sold a small chunk of shares. It's not necessarily a bad thing, but it's always something you want to be aware of. So you weigh the massive growth potential on one side and these risks on the other. Where does the analysis ultimately land? Let's take a look at the final verdict. And this table just sums it all up so nicely.
You've got the long-term Sunrise sector, you've got an order book that gives them revenue visibility for years, you've got financials showing steady growth with profits scaling up super fast, the valuation is cheaper than its peers, and the expansion plan, that's a huge growth kicker. I mean, it's just a really powerful combination of positive factors all lined up. And so here it is, the final takeaway from the source material. The analyst sees, and I quote, high conviction multi-bagger potential, and they even suggest the stock could grow 3 to 5 times from its current levels. But, and this is the all-important part, they add the qualifier if executed well.
And that really leaves us with the ultimate question for any company with a story this compelling. The plan is ambitious, no doubt. The industry is booming. The potential is crystal clear. But as the analysis makes plain, it all comes down to one word: execution. Can the company actually deliver on its immense promise? Well, that is the multi-million-dollar question, isn't it?